So I'm going to start off talking about the market, and Ruth had asked me to speak about the market performance. I'll try to give you a little bit of an outlook, and then we're going to I'll close my presentation talking about online giving and some things we're seeing and hope to continue to see with online giving within the Moravian Church. So I have a quote here that I think is very appropriate to any investment presentation. Take the first step in faith. You don't have to see the whole staircase, just take the first step. I'm doing a lot of reminding and have the past several months of telling people this investing is a long-term game. You have to be in it for the long term. That's the good and the bad. And unfortunately, we're seeing some of the bad the past month or so. In addition to the pandemic and the nervousness about that, we're seeing negative returns, which is something we never like to see. So with the next slide, if you just take a look back for just a second, almost close your eyes, go back to February. It might be slightly refreshing to do that and think about what things were like 2 months ago. It's inconceivable that, early March, late February, things we were worried about. We were worried about the election cycle. We were worried about Brexit and how that worked or didn't work between Europe and United Kingdom. How much further into record territory was the stock market going to go? How much further could it escalate? We were worried about where we were going to find workers in certain industries. There were shortages and concern over finding enough people to be able to do the work. And we're also worried about Harry and Meghan and how they exited the royal family in Great Britain. That's what dominated the news then. And almost out of nowhere, COVID-19 comes onto the scene and takes the scene over. Even yesterday, I watched some news reports yesterday, and I do that in small bits, and I try to compare all these different news agencies, and if they all say the same thing, I kind of take that as true, but oftentimes they don't. But never before in history have countries around the world been able to suddenly pull the emergency brake and do that simultaneously, and we've seen that happen. So the majority of global economies and economic activity just came to a halt in mid-March. And it did so just by shelter-in-place orders and closing borders for people moving back and forth. Example, in the United States, unemployment went from a 50-year low to more than 13% of the population being furloughed or fired in less than a month. That's pretty amazing. The speed at which stuff happened through this has really been the amazing thing. And similarly to unemployment, you've seen industries like the hotel industry, airline industry, and restaurants, dining industries, basically all activity ground to a virtual halt in those industries. So when we look at the next slide, you're going to see returns. This is Moravian Ministries Foundation investment returns from first quarter. Again, we never like to see negatives in front of our numbers, but unfortunately, for the quarter, the growth pool, for example, was down just over 15%. Growth in income down 13.6%, and so forth and so on. So what happened in first quarter, U.S. equities did really well. And you'll see that on the next slide. This is just a breakdown of the growth pool. And as a reminder for the folks listening in, the growth investment pool that we manage has about 80 to 85% of our total funds in that. So most of our investors are perpetual in nature, so they're investing long-term, so they choose growth as their allocation. So this is the breakdown, the detailed performance of the growth pool. Again, in total, down 15.09 for the quarter. But what you saw was global equities were down 20.88 in our portfolio versus the benchmark down a little more than that, 21.37. So equities had done really well. January and February were great runs. in the equity market. We saw the top of the market actually happen in February and then the bottom fall out in March. So US equities did well. This is the global equity broke down. International managers did not. So, they really underperformed. Growth led value. We saw that happen. But again, it was the US really leading in on the equity side. Fixed income was up through first quarter. You see within our portfolio that we lagged the benchmark, and that is basically because for the past 2 years, we've had a shorter duration on our fixed income, meaning that we kind of thought rates were low, and we thought that it was going to be a while before they increased gradually. So we stayed shorter on the duration side, higher in the quality, because we did want what we own to yield a good return and not have any defaults on the fixed income side. So conservative allocation, short duration, high quality. When rates started declining with what was happening with COVID-19, they did so rapidly. And of course, there was fiscal stimulus to try to combat that. But obviously, when rates decline very rapidly, the longer term, longer duration bonds is what actually end up doing better from a performance standpoint. So we lagged a little bit there. Understandable. Again, I would rather own higher quality stuff in our portfolio. Real assets, if you skip down to real assets, you'll see a negative 34.46 there. Underperformed the benchmark by a little over 800 basis points. And that primarily is due to a master limited partnership we had in the portfolio. And that partnership was a pipeline company that moved what pipelines move, oil and gas. And even though we weren't directly investing in the energy sector through our real assets, those pipelines moved energy, and we knew with what happened to oil also during the month of March that performance was going to be negative. So we actually exited that holding in our portfolio. We didn't exit it, unfortunately, until we had ridden it down a little ways. We didn't ride it all the way down to the bottom, thankfully. And we do think it's going to be a while before that asset class yields any positive performance with what's going on in the energy sector. So master limited partnership got caught up in that. Real assets underperformed. Alternative assets, that's our hedge funds and private equity, kind of private debt investments, did outperform their benchmarks and did what they're supposed to do, which is when everything else is down, they're not down as much, and control the slide of the portfolio. I think with everything that happened being down 15%, you could actually say that's pretty good. We're disappointed that we're under the benchmarks, but again, given that the S&P 500 was down over 35% at one point in March, we're happy that we eked out that negative 15 in our growth portfolio. So if you go to the next slide, this shows Abbott Downing's economic outlook for the rest of 2020. So this is really your chance to look ahead a little bit. Crisis has unfolded, but we've also had fiscal, monetary, and corporate policy that's been unparalleled. The Fed had an attitude of they're going to do whatever it takes. That's what Chairman Powell said. Politicians stepped up with historic relief and aid packages aimed actually at individuals this time. If you remember back in the financial crisis of 2008, all of the aid that they gave was primarily focused toward businesses and banks and other infrastructure things. So just to review some of what's actually happened, these are big numbers that have come out, but you've had $500 billion in cash payments to individuals, $375 billion in loans to small businesses, $250 billion given to social safety nets. That's basically unemployment, increased unemployment insurance and payments to individuals. $425 billion in a loan facility through the Fed and the Treasury. That's basically so the credit markets don't freeze up and people can still get credit and get loans. And then $300 to $425 billion for special purposes. And that's basically aid to healthcare workers, hospitals, state and local governments, funds for education and corporate tax changes. So that's been a lot of money. I didn't total all these billions of dollars up, but it's in the trillions, what has actually come out in fiscal stimulus. What comes next and what life looks like on the other side is what's being talked about a lot right now. Markets did a noteworthy job of repricing risk when everything fell in March. When the global off switch was triggered, so to speak, the initial 35+% down may have overcompensated a little bit to the negative side, but there's really no way to measure how low the economic numbers will be. How low will they go? I wish I knew that, but we really don't have an answer for that. How bad will second quarter be when that's reported, when we get to July? Who knows? It's arguably dependent on the cycle of this disease we're dealing with, adequate testing, and ideally the creating of treatment options such as a vaccine. I think once a vaccine is proven, and there's news on this every day on some of the treatment medications. There was a lot of news on it just today. That's positive news. Some of the drugs to treat COVID-19 are showing great results. And we could be moments or literally seconds away from a vaccine. But the testing and human trials and so forth does take time. We can't predict any of this stuff. And predictability and reliability is something that you like to have on a model when you talk about investments, and Wall Street's favorite mechanisms are woefully inadequate for this kind of stuff. So we can't really predict that stuff. If we look at today, what's happened since the end of first quarter through the month of April, the market's down roughly 9 to 10%. So for the year at this point, so we have had some comeback of 3.5 to 5% year to date during April. So again, if we're down 9 or 10, that's almost 6 percentage points off what our portfolio was down for the year. So that's some positivity to the market moving in a positive direction. Abbott Downing is optimistic on the longer term. As you look at this slide, you'll see some of the numbers. S&P 500, they're targeting end of the year to be 2850. It's over that today. The market's down today. So they will revise these numbers. This chart actually gets revised several times throughout the year. Again, on where some of these numbers lean, but they're optimistic that we're in the early stages of a multi-year economic recovery. In our portfolios, again, we're going to focus on U.S. large caps. We're going to focus on growth outperforming value, at least in the short term. We have a modest overweight to U.S. stocks currently because values are depressed. We think there's opportunity to make a little bit more for our portfolios in stocks. We're trimming emerging markets holdings because, again, when you think about emerging market countries, they're going to take longer to recover economically and financially, which could negatively impact the portfolio a bit. So we are trimming some positions there. Fixed income, we're actually adding to preferred stock in our fixed income portfolio because, again, we think there's some opportunity there. Within the alternative investments portfolio, we do have some new additions to the alternatives. I won't get into the details of that, but we've added to our position on in the alternative space as we continue to build out the private equity and private debt components of the portfolio. That takes time. You don't do that quickly, and certainly the offerings are not as many as we would like to have right now. That has slowed up given what's going on with the pandemic. And I included a quote here. The afternoon knows what the morning never suspected. I think certainly in the church setting, we know what the Bible says, and we know that none of this took God by surprise. It's almost interesting, some of the things we're seeing from a non-financial standpoint out of this is you're seeing more people attend church virtually than do physically on a Sunday morning. And I think in many ways, this may be our chance to reset some things. And everybody's asking what the new normal is, and none of us know the answer to that right now. But again, staying focused on our investments being longer term, and that over time they do give us a positive return is the right approach during this. And we'll hope that our investment managers at Abbott Downing are right, and that we are on the road for a slow but positive recovery to our portfolios. Now, with the investment stuff, I did want to spend a little bit of time talking about our online giving, and I want to give Vince Holbrook credit for the next two slides. I actually took these out of Vince's presentation for our board meeting this weekend. So what we did at Moravian Ministries Foundation at the request of the PEC when the pandemic started was we very quickly added the remaining churches to our online giving portal that weren't there. And when we launched our giving portal in August of last year, we did so in a staged approach, and we only added our churches that were investors with MMFA, just because it was a huge project. We were testing the system as we built it, and we wanted to try to limit exposure to how many people were touching our website in case something broke. And we did have a good response starting last August. People started using the online giving portal. All feedback was positive with that. A lot of education with individual churches and treasurers and pastors on how it worked, how money got to them. And we kind of fine-tuned that a little bit toward the end of 2019. So we were able to add the other churches very quickly. I'll give Vince and Carrie Yates on our team credit for that. They worked pretty quickly, and we had those added within a week's time. So folks could use our website to give to their church. So if you look at the big spike in activity, that's when where everybody got added, and then people started going to our website and using the portal. And that's leveled off some, but if you look at the trend line, still activity is much higher than what we had been accustomed to. And transactions are a lot higher than what we've been accustomed to. Since the pandemic happened, if you look at mid-March through yesterday, we've had over $100,000 donated to churches and agencies through the giving portal. The beauty of it is that $100,000 has gone to 95 different churches and agencies. So that's been pretty amazing. Another thing is we've seen is we've added 169 people to our database. So what we do at the foundation with our database, we have data on literally every Moravian. So, or what we think is every Moravian. We partner with IBOC to maintain that data. Mike's staff in Bethlehem does a great job reaching out to churches, updating data that they get from churches every year. So we think we track every Moravian, but what we've seen through the giving portal is we're getting monetary donations from people that we don't know. So we have to add them to our database. So if you think about that, we've added almost 170 people since mid-March that are making financial contributions to our churches and agencies that really weren't on our radar. We didn't have them linked to a church. Maybe they were members of churches and we just didn't have that data on them. The church hadn't updated that data, or maybe they're people from somewhere else that aren't really associated closely with the Moravian Church. To me, that's the beautiful thing with online giving is we're finding people, we're getting their information, and most importantly is those financial gifts are finding their way to churches and agencies within the Moravian Church. Another trend that we're seeing is our donors are starting to increase rates set up recurring donations. So with the Moravian Giving Portal, you can give once with a credit card or with a direct debit to your checking or savings account, or you can set up recurring gifts, things like I want to give every week or every month. And you can do that. And what we're seeing is people are doing that at an increased rate. Not huge numbers, but 12 to 15 a week. That's pretty good if they're turning their donation into a recurring donation. And again, that's automatic money that's going to go to the churches automatically on that cycle. So it's really a great opportunity, and we're seeing some great results from the giving portal. From the MMFA side, we do this at no cost. From our standpoint, there is a fee that goes to the credit card companies when people make a donation, and the direct debits are 75 cents. So the direct debits are the best, most cost-effective option. We don't get that money. That goes to the banks and the financial companies for the transactions. We're doing the processing, administrative side free of charge to our churches. It has added an administrative level to our work, and it's added volume to our work that we really hadn't expected. But again, the end result for the church is huge, and I think really good. The fact that we've had over $100,000 come in just really 5 weeks is pretty amazing. So we're thrilled with that. The other slide that I wanted to show really is fresh data. Laura attended a conference that the Ecumenical Stewardship Center hosted over the weekend, and one of the presentations based on this Vanco study, the graph at the bottom shows the engagement of church activities, traditional givers versus e-givers. And what you're starting to see is people that give online are actually more engaged with your church. So again, the blue line is the e-giver. The white line is a traditional offering plate only type giver. And what you see is engagement and all those metrics is higher with the e-giver. I think most of our church trustees, most of our boards, most of our clergy probably would not think that's the case. So again, developing these relationships with the folks that are using our giving portal, I think will pay dividends long into the future for our churches and agencies that we're serving. And again, will just help to build increased involvement in our churches and engagement all around. What we get out of this, again, we're serving it at no fee. We're adding a lot of work, a lot of administrative functions to it, because we have to acknowledge all these gifts, process all these gifts. We send reports to the churches with the balance of their donations twice a month. But we're also capturing data on everybody that gives. We get email addresses, we get contact information. So it will give us the opportunity to engage with people that maybe we haven't known, and continue to educate people about stuff going on in the Moravian Church, and from our foundation standpoint, stuff that we're doing. And again, we can certainly consider, how to communicate with them about making more meaningful gifts in the future. Vince had the idea already when it becomes pledge time, when we enter the fall, to do communications with everybody, just to remind them, hey, you're making your pledge. Why don't you think about setting that up as a recurring donation using the giving portal? So it'd be a great opportunity, again, to communicate and use this into the future. So we're excited about that. When we start going back to church and gathering as brothers and sisters on Sundays again, does this change? And we don't know the answer to that. But certainly I think it's typically 6 weeks to develop a new trend. We're going to be past that mark. And we do think that we'll have a lot of these people that will continue to give online into the future, just because it is easy, it's automatic. They can give to the other Moravian things from our website. There's other statistics that show that online givers typically give to more stuff. So the beauty of the giving portal is, if it's Moravian, you're seeing it from our portal. And you have an opportunity to give to that. So it's a great opportunities to use this more and more as we get into the future, whatever our new normal looks like.